Hey, what's up, guys? Dante Walker here, and in this video, we're going to be talking about the easiest way to pass an Apex account literally in one trade. And I'm going to be teaching you guys how to exploit or take advantage of the rules specifically there at Apex to your benefit so that you can get funded with Apex and really just start crushing it. So as you can see here, this is an example of what I'm talking about. You can see here we've literally hit the goal of 53.324. Uh, we hit the profit goal on this account in one trade here today, and that was like very easy. And again, I'm just going to be breaking this down exactly. What am I doing? What am I looking for? Breaking it down to you step by step, so that you can like do the strategy and start getting some funded accounts. And this is specifically for people who want to get funded accounts, right? Like especially specifically with Apex, because in the past I talk about some other different prop firms. I have different strategies for those prop firms, but specifically with Apex, I have a certain strategy because of their lax rules when it comes to passing evals and this kind of thing. So anyway, let's kind of just jump right into it. So the very first step that you want to do is obviously go on apex.com. Now, to do this strategy, I'm going to recommend that you guys have a 50K account. The reason why I recommend a 50K account because it is going to be the best bang for the buck by far, in my opinion, versus let's say a 25K or even a 100K. Because if you take your profit target for the 50K account, which is $3,000, and you divide it by your drawdown, you can see that there's only a 20% difference between your profit target and your drawdown that you have to hit on the account. And these accounts also have 10 contracts, so high amounts of leverage. And also as well with these accounts, you can literally hit like 10, 15K a month in just one 15K account, trading that, right? Versus something like if you go on let's say a 100K account, and then you do your drawdown, you only have a $3,000 drawdown on the 100K account, but you have to reach a profit target of 6,000. So that's a 200% difference or 80% difference. So it's 80% more difficult, 80% difference between the 50K account and the 100K account. And I just think for most people getting started, you can really crush it with just one 50K account. So in my opinion, the best bang for the buck is going to be the 50K account. And that's what I use. And that's what I recommend, right? For me personally, I bought 5 of the 50K accounts, I believe 2 or 3 weeks ago when they were 90% off. And this is going to be really important because of the way that we do the strategy. Now, you want to make sure that you get the very best discount that Apex is offering for whenever you're going to be trying to get the accounts or watch this video, because it is very important using this strategy that you get the accounts as cheap as possible. And to do that, you can actually use the code Dante Trades to get the best discount for whatever Apex is offering for whenever you are watching this video. And that's just going to get you the best discount possible. So you can use that code. And again, you just want to make sure that you're taking advantage of whatever the best discount code is, right? So now I'm going to jump into the charts here, and I'm just going to explain the strategy to you and kind of like what's been working for me and the mindset behind it. So what I like to do is I wait for an A plus setup, and I'm going to be showing you guys exactly what my A plus setups are and what I look for. And again, when I'm trading Apex accounts, I treat them totally different from when I'm trading, like, let's say a take profit trader, my funded futures, or any other prop firm accounts, because their rules are a little bit different, right? So I'm literally trying to pass the account in one trade with one A plus setup, because if you use max contracts on Apex accounts, the max contracts that they allow is going to be 10 contracts. And if you use max contracts, you only need a 15-point move to pass the account, and Apex allows you to pass the account in one trade. So it is very easy to get one trade for a 15-point move. So that's why we just get the accounts so super cheap, right? In my opinion, and from me trading personally, passing these evals, it is much easier to get one 15-point trade, 15.2 points or something like that trade, than to try to string together like 10, 15, 20 winning trades to equal that goal, right? And for these kind of evals, because they're so dirt cheap as possible, I personally don't want to spend, a week or two trading eval account that I got for $18. For me, that just personally not worth my time. Even if I make a bad trade and I blow the account, I totally don't care because I pay $18 and I can just use another and pass. And for me personally, my win rate is around the 70 to 80% mark. So I'd rather just take that one trade and know I have a 70 to 80% chance of just passing the account than to spend again, so much time in an $18 account. For me personally, I just totally don't care, which is why I buy the accounts cheap when we get them for like $18, $20 or something like that. And I just try to pass them in one trade and get to the next step. Now, again, this is just for passing accounts. Once you actually pass the account, the strategy is totally different, but this video is just specifically for passing accounts, right? So now that I kind of like explained the strategy and mindset and thinking behind it to you and what's actually worked for me, this is actually how you want to actually look for things. So what you want to do on the chart is you want to go on the chart, you want to look for something called the fixed range volume profile. So what I like to do is I go on the chart and I draw this fixed range volume profile. And for me, I normally like to trade London and Asia, right? London and Asia. So because I trade London and Asia, the first fixed range volume profile, and I'm going to explain this to you guys how this works. But the first fixed range volume profile that I'm going to draw is going to be the overnight session. So that starts at 4:01 p.m. EST. You want to make sure that your chart is going to be in EST. So again, I'll just draw it out here for you. So you just go here. Again, you go to volume profile, the fixed range volume profile, and you go to 4:01 p.m. and you go to 4:01 p.m. and you just draw that all the way out to the current time, right? So you can see I got it. I drew it from 4:01 p.m. 16 is 4 for my fellow Americans out there. So 4:01 p.m. all the way to the current time. And then what you want to do is you want to draw another volume profile at the start of whatever session you're trading. So for me, like I said, I was trading in this case I was trading Asia, and Asia starts at 8 p.m. New York time, and you drag that over. And when you draw these, you want to make sure that the extend right option is on because these are going to be updated in real time. And just make sure that those are both on, right? So before we actually go into the trade and the setup, I just want to briefly explain to you guys how the fixed range volume profile tool actually works. So what this does is this just a visual representation of the actual orders that are being placed in a market by institutions, right? So this volume bar here, these are really important to pay attention to. So the bigger the bars of volume, the more transaction and orders that are taking place at those levels. So this green line here that you see here, this green line is considered the value area high. So this is considered premium or expensive for whatever session that you're going to be trading. So this is the value area high. Generally speaking, when we get to the value area highs, we are looking for shorts. It's just like when you go into a grocery store, you see an onion for like $10 or something like that. Not many people are going to be willing to buy an onion at, like at $10. So the price usually is going to come down from the value area high and come more back down to a fair price, which is the point of control. Now, the point of control here is this purple line. The point of control is just the price where uh, most of the volume took place, right? So most of the transactions took place. So when we get to the point of control, we're going to see a lot of like chopping around and just consolidation and things like this. I generally am going to use this point of control for take profits and this kind of thing, right? So point of control is just considered fair value for whatever session or time frame that you're looking at on the charts, and then the value area low is going to be considered cheap, right? So this is going to be prices where we're generally looking for longs off of this price action. But again, this is all going to be you have to use these things in context for what you're actually seeing in the charts. But again, value area highs, expensive, point of control is fair value, and the value area lows is cheap for the session. And generally look for longs off here. But again, there are some exceptions. So now that you understand that, we're going to actually go into the charts to see like why did I take the trade that I took today, right? So if we look here on the charts, you can see here, I know it may be a little bit hard to see, but you can see here we have these really big volume nodes, which I always pay attention to. So that's what these boxes are. When you see these notches here, like you see these volume bars here, and then you see like a big bar volume there. That's generally speaking where you want to pay attention to. This means that there's a lot of transactions taking place at a particular area, right? And as you can see here, there was a lot of like consolidation and things like this around here, which is why we developed a current session point of control there, which makes sense. For the Asia session, and then I drew out another box here because again, if we look at the volume profile, you can see there was a lot of volume developing around this price area here. So this is why I drew these two boxes. And then also as well in Confluence, this is what I look for as well. You see we have the point of control inside of that box, and we have a value area high, this green line inside of that box. And then for this one here, you can see that we have a value area low inside of this box, and then we have a point of control inside of this box as well. So when I look for this, I just look for a lot of volume and levels, a lot of volume and levels all in the same area. This is generally going to give you like some of your best trades. So when I have three or more confluences, this is usually going to be considered an A plus setup for me. What did I see here, and why did I take this trade here today? So you can see here I was just looking at the charts here today, and then we were kind of like trading up. And all of a sudden, this is very abnormal to see, especially in the Asian session. All of a sudden, we see this huge drop down. Like you see this is like a death candle here. We see this giant red death candle just automatically drop down to the downside. So once we actually drop down to the downside and we can kind of like sharply reversed our the trend. I was actually looking for the price to come back down here, and because we broke down through these two high volume nodes, I was actually looking for exactly what we saw. So I was looking for it to come back down, retest this high volume node, and go lower, right? So either this or something like this where we come back down, then maybe we retest this one and come back down, right? Because again, we know that these are high levels of support and resistance. We know that there's a lot of liquidity here. You can see here, like this was a strong level of support. And then once we actually break down through that level of support, that flips into resistance, right? All this liquidity here that was built up. Now we're below that. So we're looking at that for a resistance level, right? And same thing here, right? We had these two levels here. And now that we flipped and we went way below those, I was looking for a rejection off those levels and to push down. So as we can see here, we dropped. And then if you would have took that first retest of this level here, you would have actually passed your account right there, right? But for me, I just missed that trade because I just missed it. It moved kind of fast. And I actually placed the trade when we retested again for the second time. And quite honestly, when we retested it again for the second time, because we broke back above this level with this candle close, I actually got out of the trade. And I think that particular account was in drawdown like $2,000 or something like that. Again, it's an $18 account. So I really didn't really care. I really didn't really care that much. I was being really aggressive trading this in this case. But as you can see here, let's see what happens when the price plays out again here. And what do we see? We see the price come up exactly, tap and test this level here, exactly what we were looking for, one of the setups we were looking for. And you actually could have took this. This was actually probably the best short trade setup. But what I was waiting for was the price to basically just fail this level again. And if we actually failed this level again, I expected us to push like really further down, because that would have confirmed that we had like a basically we had a huge jump, and then we had a failed rally, and then we were really going to push down to the downside. So what I did was I waited for a candle close back below this level that I was looking for here. So you can see here, once we actually got that candle close, see here. Yeah, so once we actually got that candle close below that area, this is where I entered this trade right around here. And I had my stop just above this swing here. And I had my stop loss just above this swing here. And my target was, I think, 15.5 points or something like that. And let's just see how this plays out. You can see there we basically just went right to the target, right? Uh, so yeah, I passed my account with one trade there. But again, I'm just trying to pass accounts with the strategy. Whenever I'm using this kind of strategy, I'm really just being like really aggressive and just looking for those A plus setups, and just like I said, like max leverage, only trying to hit 15 points and then get out. And that's exactly what I did there, right? So again, we used the volume profile. We identified key levels of liquidity, and once we actually broke below those levels of liquidity, we were just looking for the retest back into those levels and then to confirm to the downside. And that's exactly how we pass these accounts in one trade. Now, again, however you trade, just the main idea is that it is much easier again to just pass with one 15-point trade than it is to string together like 10, 15, 20 winning trades over the course of, a week or two. And in my opinion, because Apex allows you to pass within just one trade, this is by far the easiest and best strategy, especially if you get the accounts when they're on sale for, 15, 18 bucks or something like that. So this is by far the easiest and best strategy for Apex specifically that you can use to get funded. And again, once you actually pass the accounts, then you want to actually use a real trading strategy. So you can see when I'm actually like trading more normally here, you can see like last week, this was my trades that I took last week. I had an 87.5 win rate, which is actually on the higher end of my win rate. To be honest, like that was doing exceptionally well last week. Made a little mistake there, but again, an 87.5% win rate. So if you actually want to know strategies on how to actually be like more consistent and profitable and have that higher win rate and consistency, then you can make sure you follow me and I'll talk about that stuff here on this channel as well. So hopefully you got some value from that. Let me know, did you like it? You didn't like it? Or if you have any questions or something that I didn't really explain that clear in the video. And that's it for this one. And I'll see you guys in the next one. Take care.